All right, family. It's Monday. Happy Monday to you. We got some good news for you today. Finally, got some good news. We needed it. And it couldn't have come on a better day. We have multiple loans to lock again. Now, we're going to talk about why did mortgage rates dip so much today? 63 basis points to the good guys. How did we get that today? What changed? Why did Bitcoin make such a huge move today? Let me see. Let me get this out of the way. Actually, all right. 1 second. 1 second. High school production here. Derrick Evans, VA Home Loan Specialist, NMLS 155010. Give me a call, text, shoot me an email. If you want to buy, if you want to refi, you don't want to get ripped off. You don't want to pay any fees. You want to get a low rate. That's how you do it. Okay. Let's get rid of that. Let's get rid of me. And let's start diving into this thing. So we got several things to talk about today. Not as many topics on the table, but we're going to go a little bit deeper with them. And there's one thing you have to always remember. Always listen to the market when it talks to you. When the market speaks to you, listen. We're going to talk about that because a lot of people keep telling me that they believe that the top in real estate is in. And I just want to remind you of a very, very huge story that the market told us about real estate and what the market believes in a bad case scenario about real estate. Okay, we're going to revisit that. We're going to talk a lot about this chart right here, mortgage bonds. We got a huge move today. We're going to look at the Bitcoin chart. We're going to look at a couple other things. We're going to look at oil. We're going to look at it all. But let's start right here, okay? Because mortgage rates took a dip today. And what's really interesting about this is I truly didn't think this was really possible. You remember what I said? Last video I just said, hey, listen, our upside is maybe here. Maybe that's the tip top because we have that continuation trade, right? Which this has been working really, really well. If I were trading mortgage bonds, that's all I'd be doing right now, just a continuation trade. We've seen it happen time and time again. Old support becomes resistance, and it causes these things to go lower. You know, here it is again, coming up, and we're pushing right on the top of it. We also have a moving average here that's going to work against us as well. So this very well could be it. But first of all, why? Why did this happen today? The markets weren't down that much. I mean, look, the Dow was only down 166 points. S&P barely down anything at all, and the NASDAQ was actually green. So where did this huge run of money coming to bonds come from? Where did it come from? Well, you guys may have noticed these economic sanctions that are being imposed on Russia, and they, frankly, they should be. I mean, come on. Very disappointing. I know Russians. I like them. I don't think this is the Russians' people's will. I think this is the will of a dictator's type, power-hungry type individual who is not being checked by anybody and clearly feels he can get away with just waltzing into another nation and killing people to try to take it over. That's what's going on. So the economic sanctions that have been delivered have been pretty darn significant. And as I said, I was on TV recently. I'm going to put that link in there today too. It was on OAN again. I did it from right here in the house, which is pretty interesting. I think it was pretty good. Yeah, if you watch my channel, you already know all this stuff. But hey, I'm going to give you the link anyway. And one of the things I was talking about was, hey, if you're going to put sanctions, they're going to have to be pretty significant because the increase in oil, let's look at that real quick since that ties in. We're at $95 a barrel. It was up $4 again today, over 100 on Brent. When oil is this expensive, a net exporter of oil like Russia is making money hand over fist. So the sanctions have got to be significant. Plus, they stand to gain a tremendous amount if they take control of over Ukraine. And so there's a lot of economic positives for Russia to actually pull this off, unless there is significant. And then, boy, did they brought the gauntlet. I will tell you, these sanctions were significant enough to murder the already murdered Russian stock market, to absolutely, completely decimate the bond market, which is not big. Okay, Russia's not big. Texas has more people than Russia, has more GDP than Russia. Actually, I don't know about population, but it has more GDP. There's more economy taking place in Texas than there is in all of Russia. Okay, so, but Texas obviously is a big state and has a big economy. That said, the Russian stock market, Russian bond market aren't that big. Man, did they get obliterated. And I think that's where we're seeing a lot of this come from. So you're seeing fresh money coming in from people who aren't a part of these sanctions, but who have money from Russia or potentially other countries that may feel like they could potentially be implicated. They would want to say, hey, park my money somewhere safe. I'll take 3%. Because remember, a lot of these places, a lot of these different countries, their bonds don't pay jack. We're paying 1.84 today on the 10-year. The German Bund 10-year is 0.1%. The Japanese 10-year is 0.18%. So our 1.8, or in this case, these mortgage bonds here, which are closer to 3, they're in the 2s. That sounds pretty good. Sounds pretty good. But you'll notice there's also a gap here. So we have a gap from our close on Friday to the open on Monday. And that does happen on the weekend sometimes, but you can almost guarantee in this downtrend that we're in right now, which, just quick reminder, we want mortgage bond prices to go up. That is what causes mortgage rates to go down. When they go down like this, that causes mortgage rates to go up. So inverse relationship. That gap's going to get filled. Lock your loans today. In short, pull the trigger. If there's anybody who's on the fence about refinancing, anybody who, got into contract over the weekend, lock your rate, right? Lock your rate. Is it possible that you could come up and revisit, one of these higher numbers? Sure, it's possible. Anything's possible in the markets, but it's all about risk reward, managing that. There's a lot of headwinds to get up there. There's really not, it's very downhill for this thing to get back down to 100. It really is. But remember, when we were consolidating here, that's what we were saying. It's like, gosh, if we can just stay here, if we can hold the support, we'll be okay for a little while. Now we've seen some fresh money has come in. I'm assuming it's coming from Russia, Eastern Europe, because guess what? A whole bunch of money came into Bitcoin today as well. And we're going to talk about that as well, as there was a bunch of people getting negative on Bitcoin and saying, hey, it's over. It's going to 20,000. I guarantee. I can't tell you how many things I saw on Twitter over the weekend. This typical reverse head and shoulders for Bitcoin, signaling the move higher was coming, and then just busted through. Didn't spend hardly any time at all here at this major resistance level. And now there's actually another one I didn't draw, but it's basically right where it is right now. It's like right here, and it's bouncing off of that as well. This wick here is just some liquidations. A lot of people are short. A lot of people didn't believe that Bitcoin's make it through. So here's the question. Is this money that's coming into Bitcoin, is this money that is fresh? Is this new money? Is this, escaping Russia money? Or does someone know something now? We know there's an executive order coming soon on crypto. Does somebody on the inside know what's going on? And they're saying, hey, just push the buy button. I don't care what price it is. Get some, get more, get it now. That could be what's happening. We could have some big boys in there pulling the trigger left and right because they know something that's coming and it's good. So all those things are possible. All those things are possible. We haven't seen a 15% up day for Bitcoin in quite some time. It's nice to see it. We're happy about it. We expect that. If you understand what Bitcoin is, how it works, the scarcity element, you expect things like this to happen. And you've been right over time. Okay. On Bitcoin, real quick, before we talk about the main lesson today, just read this article. I'm going to include it in the description. People say that Bitcoin is used for laundering money and things like that and doing all this and that. No, you can't. You can't escape. That's why no one's ever gotten away with it. There are people who have tried. There are people who've stolen Bitcoin off of exchanges, out of other people's wallets. You can't get away with it because every transaction is tracked on a public ledger. You don't even need the FBI to investigate it. You can investigate it yourself. It's the most transparent financial system with programmed deflation and a monetary policy that cannot be changed. That is what Bitcoin is. So we looked at oil. Look at gold. Gold back up to $1,900. Hey, look at gold. Finally making a move. It was $1,800 forever. But look at crypto in here, and this is the reason why I feel like somebody knows something. Typically, Bitcoin is the leader now. It moves all the other cryptos, but usually, like if Bitcoin's up 2%, then the other ones are up 5% or 3 or 4%. It's almost never do you see Bitcoin being the one that's up the most percentage-wise. Almost never. So what is going on today? What is up with that? Are there huge short positions that are closing out? Is this some kind of short squeeze? Doesn't seem like it. There's definitely been short liquidations. But what is going on? Someone somewhere knows something about Bitcoin. Either that or maybe there is a federal bank. Maybe there is maybe the Federal Reserve. Maybe one of these, I don't know, monetary funds has started buying Bitcoin. Who knows? We don't know. We don't know at this point. We'll have more information on this soon. As again, all of these transactions are transparent. We can see what's going on. You can't tell who is doing it, but you can see what wallet's doing it. You can see what that wallet has done in the past. So we'll be checking in on all that. But bottom line is, money is flowing on big information today, and it really helped us on interest rates. It really, really did. So we'll actually pull up some interest rates here in a second. But I want to talk about the story that the market is telling us. Okay, this is median sales price of homes sold in the United States. And this is a very important graph. A lot of people say, hey, that just looks like a bubble that's ready to burst. That's what people say. You know what this looks like to me? This looks to me like a graph of something for which there is a limited supply and a steady and increasing demand. That's what it looks like. And guess what? That's exactly what real estate is. It's something there is a finite amount of. Okay, there's only so much ground. And by the way, all the easy places to build houses have already been built, except for farmland. And we need that for food, y'all. So we don't need to be turning any more farmland into subdivisions. We got to stop that, actually. So look here. All right, Q3 2021, 411,200. Watch this. Q4, 408. So we see a little bit of a settling there. Tiny, tiny bit. Like 1%. We have a 1% little there from the top. And this is national numbers, okay, by the way. So that's the average price, or the median. The median, not the average. And so here's what we are looking at. Now, aside from these gray areas here, these gray lines are the recessions, right? So aside from this gray area here, where real estate definitely went down because the recession was most definitely caused by real estate related securities. This one here is actually flat. If you look at it, it looks like it goes down during this period, but if you look at where it actually enters and where it actually exits, it's very, very flat. This recession here, we had increase, we had increase here, and then a slight decrease here. When COVID hit, remember this, when COVID hit, we saw about a 5% drop in real estate values during that short multi-month window of a recession. 5% drop was it. Now remember, they told us the Black Plague was here. They told us people were going to be dying in the streets. And what did people do? Well, just look what happened from there. When the rubber meets the road, when this generation sees a major obstacle or a crisis, they run to real estate. And why shouldn't they? Also, you're also seeing the effect of major money funds, corporations, a lot of big money, a lot of hedge fund money, a lot of Wall Street money, just buying houses to rent. Straight up going, you know what? They're looking at the same graph we're looking at right now, going, the hell are we doing? The hell are we doing? Playing with all these other things. Look at this. How can you beat that? Show me a stock that looks like that. You know, the only ones you're going to see like that, they've already made it. Their story's not over, but I mean, like Amazon, it's going to go up. Yeah, sure. But it's not going to have this kind of look anymore. It's going to be flatter, right? Companies will reach a certain point where they can't really grow anymore. Real estate doesn't have that problem. Real estate does not have that problem, just like Bitcoin doesn't have that problem. And the two are actually very, very similar. Maybe I'll do a video about that at some point. So the market told us that when stuff hits the fan, they're going to run to real estate. And so the idea that, there's going to be World War III and then people will sell their houses. Where are they going to go? What are they going to do? What are they going to do with their money? Where are they going to put it? Where are they going to put their money? Where are they going to live? actually, it's essential as well. And so I just want to remind everyone of this, because I keep having people saying, oh, you think it's about time for the market to crash? No, I don't. Let's pull some interest rates up, though, because a lot of people say, well, hey, interest rates, that could be the thing that moves the needle. If interest rates go up enough, we could get ourselves to a point where it causes prices to go down. And while this is possible, it is only likely, in my opinion, should we see rates go up very quickly in a short period of time. So let's do this. Let's log in. Let's pull up some rates. Let's see where we're at today. I will tell you this. We locked multiple loans today on the heels of this good news. And is it possible that rates could get better? Sure, of course. Catching the exact perfect moment is hard, right? But that's one of the great things about being a broker. Flip it to a different bank if we need to. Transfer the appraisal. Easy peasy. All right, let's go do purchase here. We're going to look at VA, FHA, and conventional. Sound good? Jumbo stuff, we have it. It's all there. If you have questions about it, just let me know. So let's go here. Let's go VA. We're going to start at a conforming loan limit here for VA. I'm just going to do no money down. 780 credit. Let's give us a San Diego zip code. And let's see how this looks here. Now, this was, last time we checked, this was 3 1/4. Okay, so 3 1/4 has now turned to 3% or 2.99. So 1/4% on the conforming VA, which is terrific. That has gotten better since midday when we were up 45 basis points or so. And I did not expect the banks to give us the full 63 because they know where this thing is and where it's likely headed. But it looks like they're giving us a lot of it. So that's pretty cool. So that's conforming balance, which is under 647,200 VA. Now let's do 900,000. How about that? And let's see how that looks. Now this was 3.5. It has been 3.5 for a while, and wow, down to 3 1/8. I actually need to make a note of something on that one. We're learning as we go here, guys. Holy smokes, that's so low. I have a loan I need to look at on that one. Sorry, I got to make myself a note here. Too old to remember things anymore. Okay. So, holy smokes. So, down to 3.125. Terrific news. Terrific news. Notice, too, the pricing is wonky. Like, doesn't make sense. Like, if you just look at these 4 levels right here, you can see that the cash back, the rebate, 3% costs you $2,900, but you get 3.06% for 470. Obviously, they want you to take the 470. Here, 3 1/8 has a higher credit than 3 1/4. So obviously, they want you at 3 1/8. And those things are weird. I could explain it. It's kind of boring. This is the reason why you need to be able to look at all of these things. This is going to save some people some money today. Okay, so that's VA. Now, mind you, we had a nice spike today. We don't know what tomorrow looks like, but today, it's great. All right, let's do FHA next. So we can run through this. And we're going to do 780 again. This is going to be conforming first, so FHA conforming balance. And I'm expecting, the last time I checked this, I believe it was 3.375 or 3.5. And a lot of times, keep in mind with the FHA and the VA, if your credit score is 640 or higher, you're pretty much all getting the same rate. Pretty much. Not all the time, but pretty much getting the same rate. It's not as credit score sensitive as the conventional is, which we'll get to in a second. So FHA, yep, same 2.99, same as VA for the conforming balance. Let's check a high balance here. Let's do 900. Yeah, that'll work, right? Let's do 900,000. And let's let's call it 865. That's decent math. Got to get the 3.5% down. So now we're doing high balance FHA, which is loan amount above 647,200. We're going to see where that's at. We were at 299, 2.99%. These are with no points and no fees, by the way. That should be mentioned. Okay, so high balance FHA, actually better than VA. Very interesting. Very interesting. Look at that. 3% on the dot. Wow. Look at the move. Look at the move. You know, the other thing that we might be benefiting from here is that because of the slowdown for the last few weeks, rates just getting absolutely pummeled, banks likely right now are getting out the eraser, sharpening their pencil, whatever you want to call it. They're essentially trying to fight for some business, right? They're competing in there. They're fighting for it. They know that every broker is doing the same thing I'm doing, plugging stuff into here just like this and trying to figure out where to get the best deal. So when rates dip like that, that could be something that we're benefiting from as well, which who cares what the reason is? Let's just get it and let's go. This is going to be conventional conforming balance, so loan amount under 647,200. What's up, JCK? Right? Right. Monica, yes, of course it's going to go up. That Bitcoin was programmed to go up. It's a computer program. It's programmed to go higher. It has to. Let's see. 3.75. Wow. This is giving me ideas. Okay, 3.75 conforming. Now let's take a look at high balance conventional. And so with the conventional versus the FHA, you know, you have 5% down as opposed to 3.5. But ultimately, you know, FHA is not a loan that you want long term. It's a loan that you're going to eventually refinance out of. You need to refinance out of. So if you can just start with a conventional loan, you save yourself from having to do that. Even though it may be a higher interest rate, and maybe the payment might even be a tiny bit higher. Remember, with the conventional, you get the automatic refi when your PMI drops off. FHA doesn't go away anymore. So you have a built-in refi that has no cost once you get to a certain equity point. And you can either get there by making the payments, or you can get an appraisal, send it to your servicer, and get that squared away once you have the 20% equity. All right, so high balance conforming. CMG's everywhere today. They're trying to get some business, y'all. 4.125. Okay, so still in the fours for the high balance conforming. So I got to take a look at several locks here today. I got to take a look at several things here. See what's what. Okay. That was eye-opener. That was an eye-opener. I hope that was helpful for y'all as well. Wow. So huge day for mortgage bonds, 63 bips. Huge day for Bitcoin, almost 15% higher. It was a huge day for oil. There's some interesting things going on right now. Interesting things going on. I'm still perplexed by the fact that Bitcoin has a higher percentage gain than the alts right here. That is very, very interesting to me. Something is going on. So so the story, I hadn't seen this yet. Let's look at this. Let's look at this together. Bitcoin jumps 10% after Treasury imposes new sanctions against Russian central bank. Interesting. Impose historic sanctions on Russia. So are they going to try to, here's the bear case. All right, bad news, Derrick is coming. Are they going to try to tie this move in Bitcoin to Russia somehow and say, see, Bitcoin bad, it's a place where these criminals can flee if they need to. Is there going to be something like that? Is that what is going on here? Are they trying to say that that's what the deal is? Oh, well, it's all the Russian money that's going in there. Well, we'd be able to track that, wouldn't we? Bitcoin jumps after Treasury imposes new sanctions against Russian central bank. But here's the thing. That wasn't really too far off the radar, was it? I mean, I don't feel like it was. But here's what I have noticed. Remember the negative stories? When there's a bunch of negative stories about Bitcoin, it tends to be when it goes up. Look at this. Here's another one. It's like they want us to sell it to them. Case for Bitcoin is digital gold is falling apart. Oh, this is an old one. So look at this. Okay, I didn't see this story. There's no date on it. Guys, this is great. I love being able to just call these people out. There it is. Okay, February 23rd. So here's 5 days ago. Okay, look at this. 5 days ago, so this was Wednesday. They said the case for Bitcoin as digital gold is falling apart. Bitcoin fell to a 2-week low Tuesday after Russia ordered troops to separate regions of Ukraine. This was the day before the invasion. Falling apart, eh? Interesting. All right, I'm gonna include that one in the description. I'm gonna call it. I'm gonna call it a day, but hopefully that's helpful for you. Remember what the market told us. If we experience extreme fear, if we have a situation where you believe that, oh well, the world could be going to hell in a handbasket, World War III, whatever. I really think things are going to ease on that front, but I could be wrong. However, just remember, when the rubber meets the road in a bad situation, people pushed the buy button. They pulled the trigger on real estate. And there's no reason to think they would do anything different because guess what? It worked. It worked. It's not like everyone flocked to real estate and then real estate just kind of hovered or went down. No, people flocked to real estate and real estate went higher than a mofo. So not only do we expect people to repeat past behavior just reflexively, but the fact that they got so paid to do it. I mean, damn! Mega paid. I would expect them to do the same thing again. All right, that's my time, guys. Have a great day. I'll be here if you need me, of course. Call, text, email me if you want to buy, you want to refi. I'm here for you. I will help make sure you don't get ripped off, you don't pay any lender fees, you don't pay any junk fees, and you get a great rate. Have a great day.